Hello and welcome to News9. In just about an hour or so from now, Finance Minister will make her way to the Parliament to deliver her sixth and the final budget. This is an interim budget, a vote on account, hence will detail only government spending until elections and its future plans. So will the budget deliver a surprise? You never know. Regardless of which party comes to power, the next government has its task cut out for it. India has an ambitious plan. It wants to become a 7 trillion economy by 2030. But there are challenges to be mitigated. In the next hour, we will discuss where India is and how it can achieve its growth trajectory just right ahead of the general elections and the budget 1 hour or so from now. With me in the studio is Karthik Malhotra, R. Sridharan. Gentlemen, thank you very much for taking time out. As we kickstart our budget coverage, Karthik, I want to come to you first. A very ambitious growth plan, $7 trillion economy by 2030. What are you expecting out of budget?
Shweta, I don't think there is going to be any radical reform which is going to be announced in the interim budget. I don't think so. And that has not really been the precedent. But you never know. I think, the government is fairly confident of coming back to power and they are fairly certain that they are going to form the government again after the general elections, and it comes with the Modi ki guarantee. So my assumption would be that we should not expect big ticket reforms. But what the interim budget must do is lay out the roadmap for FY 2030. Okay. So the target of $7 trillion, how are we going to get there? If not immediate steps which will be taken right now, some near-term projections, some medium-term projections on what are the thrust areas of the government going to be if it were to come back to power to take India to the $7 trillion mark.
All right. Shri, what should be the thrust areas? I think everybody would be keenly vying for what that growth path will be for the government.
That's right. So I agree with Karthik, Shweta. I don't think this is a budget where you'll see a lot of big bang announcements coming, because we have two important people who pretty much, craft the budget. The Prime Minister and the Finance Minister saying that don't expect any big bang in this budget. In fact, the Prime Minister has said this will be a Marg Nirdeshak budget. So this is, I think, an opportunity where the government is actually going to lay out its vision. We had the Amrit Kal being unfolded last year. So this will be a continuation of the government's vision towards that Amrit Kal. And we will see what is the roadmap, like the 7 trillion target that we're talking about will definitely happen. That said, Shweta, I think this is an opportunity where the government will signal to the world at large, especially the markets and consumers at large, that it is committed to keeping up its expenditure, especially infrastructure, because that is very, very critical for India's growth. And if you look at it, in the face of private sector investment declining, it's the government spending which has essentially kept the growth going. So if you're talking about accelerating, our growth to 8% and beyond, 8% is where we'll then qualify as a high-income country if we keep it for 30 years, 3 decades, as World Bank says it. I think we will see that signaling happening, that the government is committed to some of the big expenditure that will keep the economy rolling towards the goal that the Prime Minister and the Finance Minister have for the country.
All right. Will it be a $7 trillion economy by 2030? Well, that is, of course, the chart, the growth path that the government has charted for itself. Karan Bhasin, who's an economist, joining us on the show. Also with us is Srinath Sridharan, policy researcher, corporate advisor. Karan, I want to come to you first. Thank you very much for taking time out. We're just looking at visuals of Finance Minister now entering the Parliament building. In an hour or so, the interim budget would be announced. What are your key big expectations?
I mean, the biggest takeaway from this budget is going to be how the fiscal consolidation roadmap actually looks like. And there the choice is kind of straightforward. Do you want to consolidate a lot in a given year? So do you want to consolidate, say, in this budget and the next budget, and gradually, unwind a lot of the pandemic era support that you gave? Or would you want to take a more measured, gradual fiscal consolidation path, which is spaced out over 3 financial years? I think the government is probably more comfortable in doing the latter, because the way I look at the Indian economy is such that India's fiscal position looks much better 4 or 5 years from today than it looks at the moment. And the reason is that if you just look at how our per capita income has grown over the last couple of years, and if you just see, how more and more people are getting added into the taxable income bracket, tax revenues are expected to be robust going forward. And I think that's the reason why I feel if you defer slightly and have a more realistic gradual fiscal consolidation path, that will give a very important signal to the markets that growth is a priority, and at the same time you want to get back to stable fundamentals. And I think that's the balanced path that I would probably look for in this budget.
All right, a stable fiscal path and perhaps consolidation, but at a measured pace. Srinath, thank you for taking time out and good to have you on News9. You know, one of the things that people generally, middle class, will be vying for is whether there's going to be some money added in their pockets by the way of lesser taxes. Is that an expectation from this budget? It's a vote on account, but you never know with this government.
I mean, has not waited for the budget day to announce any policies. I mean, it has picked up wherever it is ready with something, it has rolled it out. So from that point of view, short of being accused of using the budget for any electoral gains, but again, the other question is, where is the opposition to even oppose such things? So I don't expect any large ones in this. I think the key messaging would be continued growth. I would be very happy if they can actually speak about or lay out the roadmap for the Amrit Kal. We have had fantastic aggregate growth in the last 10 years, but it is not actually equally spread to all the segments of the consumers. We still have concerns about unemployment, and the narrative about we don't even have, for a large economy like us, which is very proud about its digital and data governance, we don't have a single unique indicator for unemployment. And every time there's a conversation around unemployment, I think you guys on the media get force-fitted with various narratives and it simply gets shut down. I think realistically, if we can solve for the challenge of what's happening in the rural economy, and it is playing out in the FMCG stocks as we're seeing in the last 2 quarters. So some of these, I think, long-term structural one, I don't expect any big bang. The big bang would be once the elections are done, probably land reforms and agri reforms would be brought in, and I think that's a key expectation from this government.
All right. And, you know, since we are on the macros, Shri, I think one of the concerns that the government will face is by the way of buoyancy in tax revenues. GST collection figures month on month, as we've been tracking here, have been on a record high. Is that enough? What sort of tax revenues are we looking at creating? Because although GST is doing well, the government borrowing to the tune of about 5.4 or 5.9% of the GDP, because that's the target for this year. Do you think government will be able to lower its fiscal deficit target?
So you asked whether tax is enough. So if you ask any taxman or the finance minister, they'll say that no tax is ever enough. Right? So that's an easy question to answer. Now, if you look at the GDP and the fiscal deficit target, for the year gone by, which is 23-24, or the one that's going to end in March 31st, we'll probably end up with 5.9% fiscal deficit. But the expectation from the market is that the finance minister will announce a lower fiscal deficit target of maybe 5.4 or even 5.3 because of the same reason that you talked about, Shweta, which is the bump up that we've been getting in tax collection. I think there's a 0.2, according to Goldman Sachs, there's a 0.2% bump up that we're getting in overall tax collection, which I think gives the finance minister some headroom to keep up the expenditure, keep up the spend, and yet look at a lower fiscal deficit target. So I think it's possible that we may see the finance minister announcing, a lower fiscal deficit target. But whether we actually meet it or not is a totally different issue, because we're dealing with a very uncertain world this year. So we don't know what's going to happen, but I think for now we'll probably see a lower fiscal deficit target.
All right, a lower fiscal deficit target at least for this year. 5.9% is the target. May be able to lower it down to 5.4%. That is the expectation. Karan Basin also joining us on the show. Karan, in fact, Mehershi joining us on the show, I beg your pardon, who's also an economist. Karan, thank you for taking time out. I believe you've been listening to the conversations that we've been having here. What, according to you, would be the key challenges when it comes to fiscal prudence for India in this year? There are geopolitical headwinds that not just India, every country in the world is facing, but it appears that India seems to be more resilient, that according to IMF and variety of other, data projections that we've seen in the past 1 year. Would you agree with that?
Shweta, thank you first of all for having me. I think if I talk about the India macros, then the biggest concern that I see is the slowing consumption. In FY24, the growth in final household expenditure in per capita terms is expected to be just around 3.5%. Now that is half the growth witnessed the previous year. This is happening despite overall GDP per capita is expanding at 6.4%. So whenever this happens, then households are pensive. What this means is that GDP growth is merely being driven by public capex and not household consumption. And that is not a good news, because India at the end of the day is a demand-driven economy, a domestic demand-driven economy. Lower than usual household final expenditure growth in per capita terms points towards inherent weaknesses in the economy, as wealth no longer percolates to the bottom of the pyramid. So I think this consumption slowdown, which has been traditionally been the primary growth driver for India, is the concern at this point in time. And even though the IMF has sort of bumped up India's growth number by 20 bips, I'm still very much concerned about the rural slowdown and how this consumption story would come back on track.
All right. Consumption story, of course, continues to be a concern. Karthik, we've been discussing consumption and how consumption really needs to bump up for overall GDP to bump up. What are you making of the consumption story at the moment? We know that there is rural distress, and that is perhaps where the government needs to focus on in the next 1 year. But apart from that, the urban consumption from the sales of your real estate to auto to FMCG, it appears that consumption, at least in the urban markets, is still robust.
Shweta, to my mind, the consumption story has already picked up. I understand that there is unequal sort of, growth of consumption when you look at rural and urban areas. That inequality is there. But consumption is about 60.8% of the GDP as per the economy review that was released just 2 days back. So at 60.8%, India continues to be a domestic consumption driven economy. And I believe, given the geopolitical headwinds, given the geo-economic scenario, just this morning we heard that the FOMC, the Fed, has kept rates unchanged in the US economy, and the range of 5.25 to 5.5% continues to hold. It means our exports are going to continue to remain under pressure. So we cannot actually export our way to growth. And even though the focus has to be manufacturing, there's got to be enough global demand for whatever is getting manufactured in India to be bought outside of India. And with a 1.4 billion strong population and the middle class rising, and we've seen that data emerge from Price. We've seen Goldman Sachs saying that India's affluent class is growing, though the definition of affluent class could be debated. Is 8 lakh rupees enough to call somebody affluent in India, given inflation? But I think the larger consumption story is all right. Yes, there is inequality. For that, rural demand has to pick up. We've seen auto sales in cars and four-wheelers growing double-digit, whereas data for Jan is likely to come only today, and we'll look at those numbers. But expectations are that four-wheelers are going to continue to sell and grow in double digits year on year when you look at monthly data. But two-wheeler sales are likely to grow only in single digits. But the point is, two-wheeler category is still growing. So if four-wheelers are an indication of urban demand, two-wheelers are an indication of rural demand. So as long as tractor sales are happening, as long as scooter sales or motorcycle two-wheeler sales are happening, it means there isn't as much a distress in rural demand. The rural demand can definitely do better. How does it do better? It will do better. Again, we need to look at the whole chain of the economy and how it runs. So you've got to invest in infrastructure. Only if you have infrastructure will the multiplier kick in. That multiplier is going to give rural connectivity. It will make migration cheaper and easier for the rural folks to come to urban areas and work. Parallelly, job creation has to happen in rural segments as well. So if you look at employment data, EPFO month on month has shown that there has been an uptick in employment numbers. A bulk of that data, again referring back to the economy review, a bulk of first-time jobbers, the age group of 18 to 25, are getting added month on month. But if you look at the CMIE data, it shows that there is rural unemployment also rising. So while overall employment numbers are rising, or unemployment numbers may be rising as per CMIE, the rate at which rural unemployment is rising is higher than the rate at which urban unemployment is rising. At the same time, there are new additions in the formal work economy. So there are perhaps informal jobs or people going back to the farms in the rural areas. But does that mean there is distress? Perhaps not. Does that mean there is no income? Perhaps not.
You know, I want to bring in Karan Bhasin because he's also somebody who's talked about the inequality and busted quite a few myths when it comes to inequality. Karan, you know, this is an argument perhaps, and a lot of us also here have been trying to understand what sort of jobs path are we looking at? Are we looking at some sort of equality when it comes to rural and urban jobs? Because it does appear like there is an uptick when it comes to rural and agriculture sector employing more people, which essentially may not be such a good indicator for an economy, or very good indicator for an economy that is likely or hoping to become a double-digit growth economy or go on a path of developed economies. So according to you, as per a variety of data that is coming out there from a whole host of indicators, from your CMI data to EPFO data, how does one reconcile between all of these data trajectories? What exactly is jobs path looking like for you? Is the narrative about unemployment, does that narrative have any merit, or one needs to move away from it now?
So let me actually begin by saying that India does have very good labor market data. I don't know why people think that we don't have an unemployment data source. We have a very good data source, on unemployment, which is the periodic labor force conducted by the government of India. Pan India NSSO has been doing this. It's comparable to the employment unemployment survey after making some adjustments and so on and so forth. But that's the official verdict. So if you want to know India's unemployment numbers, you have to look at PLFS. You cannot look at CMIE. The reason is that the gap between the PLFS data and the CMIE data is just too vast. This has never happened in any other country. And, recently, for those of us who actually work with this data, we know that CMIE has changed its weights recently to try to fix that problem, but that problem has not gone away. So I don't know why people look at the headline CMIE numbers when, people who are kind of labor market researchers or who do research in this area, they have stopped, using the CMIE weights as it's provided in the survey. So that's just one cautionary note. Every time you look at the CMIE data, it's kind of problematic. EPFO also has its problems, which is why you need to look at the periodic labor force survey to get a measure of unemployment. And of course, it comes with a 1 quarter lag, but that's the most authentic picture that you can get on the employment situation in the country. And what we find over there is that for the first time, female labor force participation rate has, gone up substantially. And this has happened after a period of, I think, about 12 years or so, which is quite positive. But you're right, a lot of these jobs are being created in the rural area. But why is that the case? Well, there are two broad themes there. The first is that a lot of capex and infrastructure development is kind of happening in and around those regions. So that is generating employment largely in what would be classified as a rural area as per the original census definition. Now that definition itself is problematic because a lot of a lot of areas classified as rural areas are no longer rural. So we can't make that adjustment unless we do a new survey. But, again, it's splitting hairs. But so that's one reason. And the other reason is that when reverse migration actually happened during the pandemic, there's a bit of a friction that you would typically expect before these workers actually go back to urban areas. And we are in that transition phase. So it's not something that is completely unexpected. Gradually what you would find is that people would, go back to urban areas because of, wage pressures kind of pulling people in that direction. And when we do look at rural wage growth and, when we look at real rural wage growth data, basically it's healthy. It's not as if, rural wages are not growing up. In fact, if you look at the wage inequality, the way it's constructed, which is wages of salaried workers as a ratio with, daily wage workers, daily wage workers' wages have gone up substantially higher than those of salaried workers. So again, that's one way of looking at inequality. And the PLFS data also has data on consumption expenditures. And when I look at that, that also shows a reduction in inequality. Even the CMI data, which has all sorts of problems, shows that inequality in India is on a decline since 2017. So these are hard statistics, that unfortunately a lot of people have not focused on. I don't know why, but no matter how you look at data, no matter which data source you pick, PLFS, CMI, PLFS wage data, PLFS consumption data, one theme is consistent, that inequality is on a decline since 2017 in India.
All right, inequality is on a decline, and that is according to the monthly data that comes out from the government's own data suggesting a periodic labor force survey suggesting that inequality is in fact narrowing when it comes to jobs. If that is one line that one has to take without really understanding where the government is headed and the jobs data is headed, inequality is in fact on a decline. On your screens right now, Finance Minister Nirmala Sitharaman with that Bahi Khata, which has now been replaced by a tablet and a red pouch there, showing off to what is going to be in the budget of 2024. Joining us in the studios, Barney Chitran Mohit, former managing partner, Arthur D. Little management consultant. Also with us is Mohit Gang, co-founder, CEO, Moneyfront. Before I come to you, Mohit, I want to quickly get in Barney here. Barney, you've been listening to all the conversation around where the macros are headed. It looks like fundamentally India is on a growth path. We have very strong fundamentals at the moment. Where a blip can be perhaps seen is what is going to be by the way of India's manufacturing capability, some of the resistance that we are facing, geopolitical headwinds that not just India, perhaps the entire world is facing. But as far as our, import-export story is concerned, where do you see that heading? Do you think India will be able to bump up its exports even when demand remains tepid from many developing markets?
Yeah, so let me first comment on the future of the GDP growth. I think we are going to close FY24 with around 7 to 7.5% of GDP. The forecasts for FY25 are also close to 7%. Now you have to take that in context of the global growth. It is different to grow at 8% when the global economy is growing at 5%. I think it's an even bigger achievement to grow at 7.5% when the global economy is growing at 2%. So I think we have to see that the Indian economy is strong, resilient, despite global headwinds. I am personally very optimistic about export growth. I think the fantastic news from the first half of the year is that our current account deficit is now under 1% of GDP, which just suggests that there is very robust exports and imports are being managed. So yes, there is a little bit of a choppy waters ahead, particularly in certain sectors. You see IT sector has a challenge in guidance, even in manufacturing exports there are challenge, but I think we will continue to export heavily, and the India cost value proposition and the deglobalization of supply chains where India becomes more prominent will only serve to drive more upside for India in its exports and its GDP growth as we move forward.
All right, so perhaps China +1 could usually be in favor of India and ++ other countries. Let me also get in Mohit Gang into this conversation. Mohit, very good morning. Thank you for taking time out. I want to understand from you, how are markets reacting to that interim budget this morning? I believe markets may have just opened. Are we looking at some sort of positive trajectory? What sort of traction are you looking at as far as Indian markets is concerned?
Hi, morning Shweta. Always a pleasure to be on your show. So look, I think markets are kind of between three events, if I were to say that. One is obviously last night's Fed FOMC, where Fed kept the rates steady, which was not which is what markets was broadly anticipating. Market was more looking at the commentary from Fed chair, and I think out there 2 points significantly came out. One is that definitely Powell mentioned that it's kind of peak of the rate cycle, which is a very positive statement. But the second statement, which is that anticipating a rate cut in March might be a little too much, is what markets didn't kind of like, and which is what spooked the US markets. And plus there were some regional bank concerns which were emanating from US markets. So I think that is from the global cues which we take up. The second obviously is a big event in the country itself, which is budget, which market is obviously hoping and looking forward to. Out there are 2-3 key numbers which I think everyone is more keenly watching out: the fiscal deficit number, the government capex number, the government borrowing number. I think these are the big numbers which market is watching out for. And the third big event, which has kind of sandwiched between these two, is the Paytm saga, right? And I think stock is already circuit down in the morning trade. So I think these are three big news flows and three big events which market will be tracking through the day. Budget, to my mind, though it is a vote on account, but honestly, I think last time around also in an election year, government kind of came out with a full-fledged budget. So my sense is it might be a full budget, though we might not see a lot of changes around the taxation bit. But otherwise, in terms of intent, direction, everything, I think government will kind of lay it out in the budget.
All right, that is of course a very significant statement. Could be a full budget in the garb of an interim budget. We never know with this government. As I mentioned, there is precedence there back in 2019 when some very robust economic policies were unveiled for farmers. So of course, with the government with an interim budget around, we don't know whether it's going to also chart out perhaps further growth path for the government in the year to come. But before I let Karan go, Karan Basin, who's with us, Karan, we were talking about the manufacturing capabilities and where India can perhaps onshore some of those supply chains, and the deglobalization path that the world is heading into was also a part of the economy review that government released just ahead of this interim budget. From your understanding, what according to you should be the key manufacturing growth areas for India at the moment? With the PLI story, there's not a lot of positive sentiment around it, although substantial money seemed to have come in for that 1.97 lakh crore rupee PLI schemes in 14 sectors. However, just robust growth seen in perhaps the electronics, smartphone business as well as the auto sector. What about other sectors? Are you looking at some sort of pickup there in the year to come?
Well, I mean, PLI is not like one size fits all policy, right? It works well for electronics and semiconductors and largely for even mobile manufacturing, largely because there we are competitive. But in a lot of other areas, there's a lot more of heavy lifting that state governments have to do. So essentially, it would become a function of how much states are willing to, roll out the red carpet for particular kind of, industry in that particular state. And the biggest issue, the way I'm looking at it, is that while some peninsular states are doing exceptionally well and they're trying to diversify their economic growth by having different sectors and different parts of value chains come in, a lot of states, particularly in the middle part of the country, are kind of still figuring out how to do that, largely because, of course, the infrastructure development over there has lagged. So that, and the problem is that a lot of resource-rich part of the country is that particular region. It's the central to eastern region. So unless that infrastructure development kind of picks up and you can connect it to your ports and the peninsular region, certain industries where you need a lot of cheap access to, capital, commodity goods, that's going to be a bit of an area of struggle. One encouraging information, or rather news, that came yesterday was the reduction in duties for components of mobile manufacturing. And if that is any indication, it seems to suggest that at least from the policy front, government is now realizing that it needs to bring its customs duty policy, the international trade policy, in sync with its industrial policy. Mm-hmm. And doing that would also do a lot of heavy lifting for upstream and downstream investments in existing companies, so for existing value chains. So for instance, pharmaceuticals, you can see a lot more raw materials, particular kind of industries in chemicals and so on and so forth come in because of rationalization of those duty structures eventually down the line. So it's at the end of the day, it's all about reimagining how you want to link your domestic tariff policy with your trade policy and your industrial policy. And as long as the thinking is in that direction, I think we can expect at least 4 or 5 major sectors where we would be a bit more competitive. This would be in addition to pharmaceuticals, electronics and automobiles, where as it happens, we are a force to reckon with.
Okay, and which are the other sectors?
I mean, that's anyone's guess, right? That would be a function of what essentially are the kind of SOPs that states are willing to provide. Okay. Say for instance, if I were to give you an example, battery, even though you can kind of argue that it's related to electronics, right? But if you can ensure a robust supply network of lithium from mines to manufacturing plants that focus on making batteries, that's a big achievement in itself, because if you want more electric vehicles to be produced, you would be consuming a lot of batteries, and at the moment a lot of these are actually manufactured in China. So your transition from automobiles, internal combustion based automobiles, would result in your dependency to shift from Middle East for oil to China for batteries.
Right.
And I think between the two, you would be more comfortable being dependent on the Middle East rather than China at this moment. So unless you get your supply networks domestically right, and you get, your dedicated freight corridors in place and so on and so forth, that is going to be a big bit of a difficult situation. Another major area where I think, there's a lot of scope and where, we have to kind of catch up would be in defense production. And if you just look at instances over the last couple of months and the role that Indian Navy is now kind of, playing in the Indian Ocean, that itself is a signal that we need more and more indigenous production of defense equipment so that we can also save money and at the same time have the necessary capacity to be able to scale up in the event of a conflict. Because remember, the last 2 years, if they've taught us anything, is that the world is becoming a very unpredictable place, and you kind of need to be able to have the necessary tools to be able to deal with it.
Absolutely. Karan Basin, thank you very much for taking time out. Thank you for joining us all the way from the US. Srinath, I want to take this question to you. Interesting commentary there from Karan Basin. He's saying your industrial policy should be in line with your trade policy, essentially hinting that there should be a reduction in customs duty when needed, an increase in customs duty when not needed. It hasn't really worked out for India, especially with IT hardware. Come to think of it, there was an introduction of a duty that was later take a U-turn on, and then there was an introduction of duty, but then again, we don't know what the clarity was. All to ensure that there are more PLI applications as far as IT hardware in India is concerned. Is duty-led path what we are looking at? Perhaps frequent duty, custom duties and various other duty structures to be put into place in order to ensure that we onshore some of this domestic manufacturing. Would that the path you think this country will need at this point in order to ensure there is more robust domestic production?
I would say yes, for the simple fact that we are not seen as an isolated island manufacturing and trying to export. At the end of the day, we'll have to be very competitive, and each of these products or even sub-products that is being produced, we might have a different competitor nation, and we'll have to figure out what is those pricing or import or export duties. I think that's the nature of what we should look at duties. So far, we have looked at duties as saying that on a very flat basis, we have said that if you import electronic chips, this is at 48% flat. But are we competitive with Taiwan? Are we competitive with Vietnam? Those are the questions to ask. And I think what we saw a couple of months ago in terms of these changing duties, banning imports for, let's say, for laptops, all that, I think probably let's attribute it to the bureaucratic overzealousness. But I hope we don't get into that. But I like what Karan spoke about, linking it to the trade sector as well. End of the day, why are we making all these policies for? It's for trade. And if you're not addressing their needs, it's not going to get us anything at all.
Okay. Karthik, interesting, line of conversation. I'll also want to get in Shri into this conversation. We throughout the year, we talked about the IT hardware import ban. That the ban was then taken a U-turn on, and we don't know what the clarity is at this point in time. But the government definitely...
The government never called it a ban.
Never called it a ban.
Just restrictions. Tell us
who
you are importing from. Tell us how much you are importing.
Clearance.
And then we will give you the go-ahead.
And it basically brings us down to a point where we don't... It appears that the government and overzealous, as Srinath put it, overzealous bureaucrats don't really know what sort of path to take, because then you first come out with a circular, then you take it back, you recall, then you offer a clarification. Is that the path we want to head into, or what are you making of this entire saga as it unfolded?
So Shweta, I think we all know the end objective of any policy measure, especially in the electronics, IT, hardware, smartphones, etc. right now, is that we want Make in India to kick in. We want these PCs, laptops, tablets, servers, IT, hardware to be made in India.
Absolutely.
Also because India is a large consumption market. We are buying these equipment, we are buying these goods. So, we want as much of the manufacturing base to shift to India as possible, because that is going to, of course, employ more people, have more investments coming in, cheaper, no custom duties, etc. So overall, it augurs well. The second objective, end goal, end game here is that we want to reduce dependence on China. So if China is manufacturing a bulk of these equipment, which now it is not, I've been told, but if China continues to make most of these equipment and we import from China, we are giving a fillip to the Chinese economy. So at some level, this race to become the top 3 economies, at some point hope to beat China, all of that is the end game when it comes to such policy measures. Now, Should these have been better thought through? Obviously, yes. Should we have been in that urgent need to issue a circular, issue an order, and then make amendments to it and then recall it altogether? Perhaps not. So what the government wants to do is very clear. We want to make in India. We want to perhaps arm twist a little bit to make sure that that making in India does happen, because no country who wants to, or no company which wants to do business globally can ignore India.
Absolutely.
So, there is absolutely no logic there in a company not wanting to sell its products in India. So, make in India, India does not import from China, but then obviously this is not something that can be done overnight.
Absolutely.
So, you've got to plan your PLIs, and you've got to plan your investments, and you've got to give producers, manufacturers, OEMs enough time to set up shop in India. Long term, excellent idea. We should be making these products not just for our own domestic market, but for the global market. Make in India, not only for selling in India, but for exporting outside of India. All that is great. It has to be done a little more strategically and planned out better.
All right, planned out better. Shri, competitive duty structures. I think Srinath was right to point out, whenever we are lowering duty on a certain product, certain component, we need to understand there are other developing countries right here in Southeast Asia who are also competing with us. Why should somebody come to India and make in India? You have to be competitive when it comes to duty structures.
Exactly. So that's the whole thing about the electronic industry, Shweta. It's a complex ecosystem driven industry. What is a component for one company is actually the end product for another company. So if you want all these little pieces that eventually go into making a phone in India, all those pieces to be present here, then navigating this whole customs duty on components is a very, very tricky, complicated issue. So that is where I think where the bureaucrats end up facing a challenge, because let's say if you end up hiking the duty on one particular chip, let's say which we are currently importing from Taiwan, China, wherever else you want to name it, but you want that ecosystem also to come here. So who will come? If the, unless you support, and if you give them protection, then the company which is using that component will cry foul, saying that, you called me here to manufacture the phone, and now you raised, duty on my component. So it's a very tricky, situation, and it has to be navigated. And also the very nature of the global trade is that we source best components, the cheapest components from countries that have the skill set and the scale. Right. So it cannot be that you try and do everything on your own. I don't think that is really an advisable route for us to take. Yes, there are some critical technologies, critical R&D skills that we need to promote and make sure that India has, as Srinath also said earlier, we live in a very tricky world now.
Absolutely.
Where at any point in time, any technology can be withheld from you. And that can severely impact, like what China is facing right now with the US, with regard to high-end chip manufacturing skills, equipment, and even manpower. So I think the whole idea should be to look at what is the optimal way in which you can make in India, but not have everything being made here.
Okay.
I think that would be an unrealistic goal for us to chase, Shweta.
So perhaps be realistic as to what you can make in
Absolutely. We need to pick our fights.
Absolutely. We need to pick up our fights. I will come to you, Bonik, on what we need to make in India and some of the sunshine sectors that are fast emerging. Semiconductor. In a bit, Shweta Saini also joining us on the show. Shweta is an agri-economist. Shweta, thank you very much for taking time. As far as the agriculture sector is concerned, what exactly is the expectation from this budget? Last time around, when there was an interim budget, farmers were made some very extensive promises. Were those promises lived up to? And what are your expectations from this budget?
Lovely. Hi, Shweta. Thank you for the invitation. So the way I see it is that this budget, women and farmers are, as it's happened before, would continue to be center stage. And I say it for two big reasons. In the last 2 years, we've had very high rates of food inflation. That's happened because the crops have suffered due to high temperatures, or because of El Nino affecting the monsoons, and therefore the crops have gone down. There are new pest attacks. But all of this has pulled up the food inflation, because of which the government has had to take a slew of policy actions, mostly on the supply side. So they've opened imports, they've signed MOUs, they've put stocking limits, everything to pull down prices, because of which the farmers inevitably could not make what they would have made had these restrictions not happened. So that's one reason that there has been 2 consecutive years where the farmers have not been able to make what they could have in terms of their incomes. Second thing, Shweta, the way I see it is there have been political promises in the recently concluded state elections, and many of them were centered on crops and women. And recent example has been that they promised that the wheat MSP would be is 2275. They said that we will jack it up to 2700. They have just last week increased it to 2400. Now the question is, if one state has a higher MSP and the adjacent states, which are also BJP, would not have it, would have a lower MSP. So of course the optics don't match up. So clearly for both the reasons, I see that the focus will be on welfare, because they have suffered in the last 2 years particularly, and also because some state politics has been, would be driving a lot of what they will be giving out. And clearly PM Kisan is one of the interventions they started in the last 2019 interim budget, and I see that that could be one anchor policy that they will augment this year too.
All right, PM Kisan, which was launched in interim budget of 2019. Shweta, before I move on from here and to other guests, as far as PM Kisan is concerned and the money in the hands of farmers, there was a huge promise made that that money will double in years to come. Has that met the expectations? Has there been any sort of momentum on ground?
So, Shweta, the objective that in 2015-16 PM Modi had said was that he will double incomes by 25-26. And that, of course, via a lot of case studies which have been put out by Niti Aayog and others, has been showcased to have happened. But I doubt there is any data at that scale which would corroborate that. However, as I've said, that there is stress in the rural areas, and doubling may not have happened, but clearly, let's see, the doubling proof hasn't really happened, because we know last 2 years has not been good for the Indian farmers, particularly on the crop side and also when they sell. Of course, we have growing evidence of farmers are also acting as traders nowadays, but of course, a lot hangs there, and the distress is palpable.
All right. It doesn't look like there's some tangible proof of that doubling. Karan Mehershi, I want to come to you at this point. When we talk about farmers, rural distress has been the talk of the town for past many months, especially given the fact that, agri has not been favored by the weather conditions. The effects, or rather impact, of El Nino has been felt throughout the year. We've seen vegetable prices, we've seen pulses prices skyrocketing in the past many months. As far as agri sector is concerned, because that is going to be one of the bucket areas for the government to focus on, what are your expectations?
Well, Shweta, the Indian agricultural sector posted an output growth of just 1.2% in second quarter, the lowest gain in many years that we've seen. Overall, the agriculture sector is expected to grow at just 1.8% in real terms for the current financial year. Now, I've said this many times on your show that generally the agriculture sector grows at around 3.5 to 4%. 1.8% growth for a sector where almost 60% of the population depends upon is something that we really need to ponder on. The weakness of demand can be seen in data from FADA, or the Federation of Indian Automotive Dealer Association. Now, there's a bit discrepancy between what the FADA data is suggesting and what CM data is suggesting. Tractor sales had actually declined in November, which is the peak festive season for tractor sales, even though CM data was suggesting that tractor sales have increased. Also, the El Nino, as the other guest was pointing out, has contributed to drier than normal conditions, further suppressing farm output. And I think the repercussions are already pretty much visible on the headline inflation number, where your food inflation is driving the inflation growth story. Yet, given the fact that more than half of Indian population is dependent on this sector, the slowdown is pretty significant. Also, we must consider the fact that the non-secured loan growth that is growing at double digits is also giving us a sense that there's a greater stress in the sector because people are primarily augmenting their incomes through such loans from shadow banks like NBFCs.
Okay, the growth in unsecured loans that has spooked RBI in the past many months. Before I move away from agri, Karthik, I would like to bring you back to this conversation. There cannot be growth without agri growth, without growth of farmers in this country. Now, Shweta pointed out something very interesting. She said there are case studies where farmer income has doubled, but that is not equal or across farming sector. It continues to be a key priority area for the government.
I mean, I think it's pretty clear, Shweta, and one of the four major constituencies that the Modi ki guarantee comes with, and the promise that the Modi government is putting and really relying on the faith of the people, the main constituencies there continue to be the farm sector as the lead priority, followed of course by, or in equal measure, distributed between women, youth and poor in general. So we are definitely looking at agri sector as a key constituency for the Modi government, for the NDA government to go after from a votes point of view. Now, will the interim budget really be able to come up with any extended allocations for the farm sector or extra doles for the farm sector, for the agri sector, by way of promising a doubling of farm income or the other schemes, the PM Kisan, etc. Because these are going to obviously have a direct bearing on the voting pattern in the country.
But come to think of it, PM Kisan was actually launched in the interim budget of 2019.
In 2019. So will the government want to do that today is something we'll have to wait and see. But obviously, you need this protection of your own food security. That is something that you definitely need in the country, given again what is happening geopolitically. In fact, all of last year, Shweta, we've seen, rice exports, sugar exports, wheat exports, all of these kick in multiple times ever since the start of the Russia-Ukraine war and the disruption of supply chains. And then, of course, overall inflation pressures within the country. India wanting to safeguard its own population by ensuring that there isn't any further pressure on farm prices, on vegetable produce, on farm sector output. So obviously keeping inflation in check is priority, delivering growth is priority. Farm sector is a big chunk of the voting population, so that is priority. Farm sector cannot be ignored. But will there be big policy instruments being deployed today to cater to doubling of farm income? We'll have to wait and watch.
Of course, we'll have to wait and wait. It's anybody's guess.
See some sort of higher allocation for PM Kisan, Manrega, and even Awas Yojana, which will actually help, increase rural income. So, if there is anything in the budget which might come along, I think it's safe to say that we might see something, some sort of incentive, some sort of more money being spent on rural economy, on rural schemes, which will benefit, the people there.
Will it be direct cash transfer? Yeah. We don't know. Of course, that is the expectation. My colleague is also joining us. And let's quickly get a markets check. Suyash Maheshwari joining us here in the studio. Suyash, we've spoken to Mohit and he perhaps talked about that markets will be moving in one way or the other on the basis of what's going to come in the interim budget. But there have been other markets moving factors. One of them, of course, is the fact that RBI has taken a rather aggressive stand against Paytm.
Definitely. And the Paytm story, the stock has opened about 20% lower. And essentially, the contribution that comes from the financial services segment for the Paytm is about 80%. So the question really is what happens next for the Paytm? We are, of course, seeking clarity as to what would be next for the Paytm and what does this essentially the RBI restriction means for the company going forward. But as of now, as per my understanding, from February 29 onwards, they won't be able to onboard new customers. And the services, their deposit services as well as the FASTag services, that will be suspended. Although from what I understand as well, that the money that has already been deposited, that the depositors will be able to take that out post 29 as well, February 29 as well. So they won't be impacted. But yeah, the stock is down about 20% or so, and there are a multitude of factors that the market has to react to this morning. We opened on a rather flattish note, marginally higher, but the markets have been rather choppy. We had the US Federal Reserve's policy decision that came out last night, and they
no surprises there.
No surprises there, but there is a slight shift in the stance. Till December, they were talking about a potential rate hike also in the future. This time around, no mention from the governor as far as the rate hike concerned. But they have also said that, the focus still remains on inflation and till that is substantially below that 2% or around that 2% mark, they won't be looking at a rate cut. And you know, back in December, when Fed had put out the word that, you know, they could see up to 75 basis point rate cut in 2024, the market was expecting a rate cut to the tune of about 6 rate cuts, and they were factoring in somewhere around 75 to 150 basis point rate cut. But you know, that expectation has been pushed back from March to now July is what I'm hearing. And then we also have, apart from that, the Fed decision, we also have the PMI, manufacturing PMI numbers that come out. Of course, we are in the midst of the earnings season. Adani Enterprises, for one, reports its numbers today, and also the auto sales numbers will come out later today as well. So lots of cues for the markets to react to.
And how are markets reacting to that?
So we have opened on a rather a flattish note. Nifty opened below the 21,800 mark, just marginally shy of it. Since then, we have lost some ground, but you know, we are still hovering around that 21,750 mark. Most of the sectors now, they are trading in the green this morning. Nifty Bank, you know, as we know, has been a laggard in the past many months, and although it has recovered substantially, making higher highs for the past few sessions, we are seeing some bit of a profit taking this morning, and the markets have been rather choppy. As you can see, Shweta, Nifty Bank opened marginally higher. We are seeing some bit of a decline from the key resistance level of about 46,300 for the bank. And overall, despite the recent outperformance of Nifty Bank in the last few sessions, we are still about 5% below the all-time high levels. IT stocks were also seeing some bit of a choppiness, and that is of course on the back of the decision that came out you know, in the US. Other sectors that are reacting are auto sectors. You know, the anticipation is that December numbers, auto numbers, the sale figures are going to be good, and we have seen some indications from the results of Maruti as well. And you know, a lot of companies have also declared their business update. So the expectation, the broader expectation is that we are going to see some bit of a spike. So that's why perhaps the auto stocks are reacting in the positively this morning. But overall, a rather choppy session. And you know, as and when the news come out, we'll keep a track of how the market is doing.
All right, thank you for that, Suyash. Let's quickly get in Mohit Gang back into the conversation. Mohit, you know, you're looking at how the markets are reacting at the moment. As far as the higher for longer narrative is concerned, that in a way has been now reinstated and firmed up by the US Feds.
Hi, yeah, I think Suyash kind of summed it up very nicely. But look, honestly, on the FOMC thing, markets were anticipating kind of a rate cut around March, which I think Powell has clearly ruled out. And I think that rate cut thing has gone down the track now, perhaps to July or maybe even further. And US economy, as always, is and the statement was it's looking in balance right now. So they are not looking at hiking rates, which he categorically denied, which also was a first from the Fed when he came out very clearly and said that we might not, we are at the peak of the rate cycle, and now there is no requirement of any rate cuts, any rate hikes from here on, right? So I think that gives a little bit of a semblance to what one can anticipate. US yields actually eased off around 10 odd bips yesterday night, which was more to do with I think some crisis in the regional banks out there. And my sense is, look, US market data might not play so much on the market. A rate cut in March or rate cut in July is, yeah, give or take, it just dampens the sentiment a little bit. But my sense is, as long as you are clear that rate cut cycle is likely to happen this year, markets will play along. So my overall sense is that market continues to be in the momentum unless something dramatic happens in the budget. I think we will keep chugging along.
All right, markets continue to be in the momentum, but Paytm stock hitting its lower circuit just at the start of this trading session. Shri, I want to understand what's happening here as far as the Paytm story concerned. RBI has taken a rather aggressive action, suggesting that there was non-compliance on behalf of Paytm. Paytm cannot onboard new customers as of this morning. What are you making of that news item? What exactly has gone down?
So what we know is what RBI has said, right? That there's a compliance issues, and if you're someone who's dealing with money, other people's money in particular, that's a very serious issue. So I don't think Paytm's really come out with any kind of statement, correct me if I'm wrong, yet, which talks about, you know, what is really the issue there.
Paytm did in fact release a statement this morning.
This morning, is
and
it?
in
Okay.
fact, the initial estimates from Paytm are that it could hit the EBITDA as much as 300 to 500 crore rupees.
Yeah.
But it has also said
has it
that,
spoken on the
that it is
compliance
going to
issue?
immediately comply with the RBI's order. But
Right.
what that compliance is, we haven't
Exactly.
really
So
heard
we
yet.
still don't know what are the compliance gaps that the RBI is hinting at. Obviously, RBI has a monitoring cell which looks at compliance of companies like Paytm. So I think immediately what Paytm needs to do is to address whatever the compliance issues are, so that the sentiment around the stock is first stabilized. Because down 20% means, and if you can't onboard customers, it's basically saying that your business is coming to a halt.
Absolutely.
Right? I mean, you can't
the
do
business
anything.
is, business is closed, Manik. It appears like Paytm, it's a huge blow to its market.
So it's much worse than, I think it'll be far worse than what you're talking about. Today, if you're a customer, I think you'll start clearing out your Paytm wallets. You'll start taking out.
It's
your
like a run
deposits.
on the bank,
So
like
a
that.
run on Paytm is about to start. Right? So a bank run starts. It doesn't matter whether you comply within the next 24, 48 hours. You will not be left with any more money soon, right? So more importantly than issuing a statement on compliances, Paytm should talk to customers about not taking their money out and the fact that they're addressing it. But a bank run on Paytm is inevitable. I think a lot of money is going to move out of Paytm wallets. A lot of money is going to get spent very quickly. I don't think customers are going to wait till February 29th to do it. It's going to happen in the next 3-4 days.
All right. Is there any precedence here in India or outside of India as to a bank run like Fintech run has happened prior to this?
Well, off and on you have rumors. For example, ICICI, I know how many years ago was it, Karthik? Maybe 10 years ago?
2014, 15 if I'm not mistaken.
So, I think more than 10 years ago, there was this whole thing about ICICI, going bust, and there was a near bank run before ICICI came out and clarified and said there's no such thing happening. So it's not unprecedented, but to the point that that's being made, financial industry runs on sentiment. It runs on faith and trust. So if you know that your bank has the money, you're not going to go and ask the money for the bank because it's safe. But the moment you know that your bank is going to go bust or it doesn't have money, that's when you run. It's like what happened to Silicon Valley Bank or anything else in the US, right? So I think it's most important for Paytm. That's why I said, the clarification which has come out from Paytm is just not enough. Just to say that, okay, we'll comply is not enough. They have to open their, books and say, okay, this is what our situation is, and I think we're covered. And whatever the gaps are in terms of compliance, we'll do it. But there is no need for anyone to take money out of your wallets right now, because I think we are fairly well protected, in terms of our covenants and the rules that we need to stick to as a bank.
All right.
There
so
is precedence on bank runs in India and cooperative banks 5-7 years back.
Right.
If a bank run starts, by the way, the RBI actually steps in and actually takes control of the bank, right? So there are many scenarios, and if the bank run starts and Paytm doesn't stop it, then there will be further consequences for the company. So again, it's a tough.
Cooperative is a totally different,
but
ballgame
there-
where you have banks
but-
going bust almost every other month.
But it's stopped now.
Yeah.
It's stopped. But again, here, millions of people have their money in an election
Absolutely.
year. I don't think the government is going to take chances.
Absolutely. It is as aggressive as it gets when it comes to Paytm. Paytm stock down by about 20% in this markets trading session as of this morning. All eyes will be on Paytm as to what sort of clarification it comes out with. The one that it has at this point is simply not enough. We'll be back with our budget coverage right after this very short break. Stay tuned.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There is certainly a wall of capital coming into the clean tech, climate tech space, not just in India but across the world.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News 9 Plus, ahead of the curve.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
Welcome back. You're watching a rolling coverage in the run-up to Budget 2024, Interim Budget 2024. But does it have the potential to scale up to a full-fledged budget? That is not something that Prime Minister Modi said yesterday, and he said this is pretty much going to be an interim budget itself. But this budget obviously comes at a time when we are just weeks before the general election season kicks in. So the larger question being asked right now is that, will the government be able to walk on the path of fiscal prudence, or are populist schemes really going to penetrate even into the interim budget and really mess up the fiscal prudence roadmap? Should not be the case, but you never know, elections around the corner. We'll continue with all our guests who've been with us, R. Sridharan and Barnik. But we're also joined now by Professor Nandini Datta and Vivek Kumar, economist at Quant Eco, also joining us remotely. Ms. Datta, let me start with you. You are a teacher. We are students of political economy, and you teach that subject at Miranda House. Ma'am, how are you seeing the interim budget? Is it going to be fiscal prudence, or do you think there is a potential of populist schemes to fit in?
Okay, with the kind of direction that your question is, it almost seems that populism and fiscal prudence are at loggerheads, and there is a trade-off. But interestingly, given the kind of situation that the government is in, the populism is not the dictate of the elections per se. It is the dictate of the economy itself, because the government started with, say, the free ration scheme for a large section of the population, 2020 COVID years. It has not been able to give up. Manrega was the platform on which this government in 2014 made a very big song and dance and said that that is something that's absolutely ruining the expenditure profile of the government. But till today it doesn't, is not able to take it off, neither. And the truth is that I have been looking at some of the highlights. It might even get a greater allocation.
Okay.
The question of capex is also very much there. The question of creation of jobs is there. But at the same time, things like Kisan Samman Nidhi and others may be continued. Some people believe they may be increased. But the fact of the matter is, as a sector, it is not Kisan Samman Nidhi that needs to be worked on.
Okay.
It is something else that needs to actually boost up agricultural incomes. And the government's own review, which was published day before yesterday, is clearly saying there is a reverse migration to the agricultural sector.
So hold your thoughts there, Professor Datta. I think an interesting point you made, that fiscal prudence and populist schemes may not always be at loggerheads. I understand that when there is infrastructure development, when there is capex investment, then obviously it is for the long term, it is for larger growth of the economy. But when we talk about doles, especially the Ann Yojana and another 80 crore poor people to benefit from it for a period of 5 years, unaccounted for, unbudgeted for, do you think there is then some clash between fiscal prudence and populism?
So, Karthik, to my mind, it will be morally reprehensible for a government not to take care of its most poor, poor people, the poorest people who are struggling to, even get a square meal. So that is, I think, something which the government is duty bound. But where it becomes a moral hazard, Karthik, is when we start giving money to people who don't really need it. For example, what's happening in many states right now, which is in terms of free bus rides, in terms of free electricity to people, in terms of employment guarantee for urban youth and for women. I think that is a dangerous direction for us to take as a country, because there comes with a moral hazard where many people may actually stop even putting an effort to try and make a living for themselves.
Absolutely.
So I don't think we can afford that. But yes, I'm all for government supporting people, giving food to people who don't have any means of earning a livelihood or who are at the really bottom of the pyramid.
Right.
But I don't think we should create this sense of entitlement across all spectrum of society, all segments of our society, where people feel that they can get by without doing their best or trying to get ahead in life.
Absolutely.
I think that's a dangerous situation we should not get into.
Absolutely. Manik, just to take that conversation forward, and let's really look at it in the 4 buckets, the key constituencies which come with Modi ki guarantee. The number 1 guarantee being that the government is pretty confident it is coming back to power and will resume office for a 3rd term. But more specifically, the 4 constituencies that we are talking about, the agri sector, women, poor and the youth. Now, I think the thrust area here by default needs to be on job creation, like Shri mentioned. And this job creation across, keep agriculture aside, across the other 3 quadrants of the equation will only come through if there are enough jobs being created by way of manufacturing. And that manufacturing story has not really kicked off as we had expected it to.
Yeah, so I think the government is well aware of this. So I don't expect a lot of populism. There will be selective populism. Let's look at the context, right? I think the Prime Minister is fairly confident that there will be a 3rd term. There are talks of even 400 seats now. So I don't think the government is dependent on big bang measures to get votes.
Right.
The primary objective in the budget will be to continue the path of fiscal prudence. I think we will come under 6% in terms of fiscal deficit numbers, and I expect the Finance Minister to announce a roadmap to a 4.5% fiscal deficit, while she also announces the roadmap to a $7 trillion economy.
Right.
What this government has been great at is selective populism. I think the beauty of all of the budgets is, if you look at all of the budgets, even where aggressive measures are introduced, once the detailed numbers are published, you will see that a lot of schemes are also cut. People don't talk about where budgets are slashed. They only talk about where budgets are increased.
Where budgets are increased, right?
So if Manrega budget is increased, it will come out of something. Right? It's not going to come out of anything else.
Right.
Absolutely. So now talking of the 4 constituents, the government is pretty clear that if it doesn't create jobs, right, it creates a governance problem in the next election.
Absolutely.
So for me, I would watch out on 2-3 things, right? Capex allocations last time in the budget were 5%. That creates infrastructure, that creates manufacturing.
Yeah.
I would expect that to continue. I would expect, we had a discussion on manufacturing. I think the discussion on trade is a little jaded, right? I think what investors need is a consistent trade policy, but not trade benefits.
Correct.
If the government is bold, they should announce a PLI 2.0, right, which is sector specific for sectors where jobs need to get created.
Right.
Even for agriculture, I don't think the incremental growth will come from just farming and prices. You have to have food processing attached to that. Expect that to be an area where you have more PLI.
Absolutely.
So I think the government is sensible, right? We will ensure that the path to create supply, capacity and training and skills will continue, and money, if spent beyond the vulnerable spending like food, will be focused on skill development, PLI investments, job creation.
Absolutely. So let's talk about PLI, and let's bring in Vivek Kumar, also economist at Quant Eco, joining us. Vivek, how do you view this whole PLI story? Because as per the economy review of the government, we have seen that out of the PLI allocation outlay of 1.97 lakh crore rupees, we don't know how much of that has been taken up, but investments to the tune of over 1 lakh crore rupees have kicked in. So there have been investments of 1,03,000 crore rupees, if data serves me right. There have been MSMEs in excess of 760 who have benefited from PLI as per government data, and there are 7 lakh jobs that have been created thanks to the PLI scheme. To your mind, for the youth to get employed in the country and for the employment numbers to keep ticking in, is PLI the right tool? And within PLI, do you think PLI should be seen as an economic imperative or as a social imperative when it comes to job creation?
Hi Karthik, thank you for having me on the show, and good morning to all your viewers. Now, I'm not too sure if I got the question in its entirety because there was some audio problem in between, but whatever I could grasp, I'll try and respond to that.
Sure.
Now, PLI is a long-term policy move. It has a gestational impact on the economy. We are all aware of that. So we have to not view it from a short-term, from a short lens perspective, but from a more medium to long-term perspective. So PLI so far has created a few winners, but largely I would say the focus of all the champion sectors which the original PLI had envisaged is yet to be seen. So to a large extent, you could say that it has seen limited success so far. Now, having seen limited success in the early phase of implementation is not a litmus test for it to be either successful or not successful. I think the ethos behind PLI is something which is very simple. You have to create few champion sectors in the economy, and these are manufacturing led, and you have to create an entire ecosystem around the manufacturing capability. So it's not just PLI. You have to also supplement it with the infrastructure development measures, which the government has been taking very, I would say, progressively, especially in the last 3 to 4 years. And you also have to create an overall environment of, let's say, ease of doing business, which goes hand in hand with PLI scheme.
Right, Vivek, so hold your thoughts. Let me bring in R. Sridharan into this conversation. Sri, I think, some hero sectors need to be identified, and in fact, India did have an allocation of 76,000 crore rupees for the semiconductor industry. But right now, the investments that we've seen, barring, let's say, a Micron, we haven't really seen too many MNCs move beyond the MOU stage and break ground in India. Though in Vibrant Gujarat, we heard domestic leaders, from Reliance to Tata Sons to Hiranandani Group, etc., vouch for their investments coming into the semiconductor space. But PLI, we have seen success in the smartphone category, and the additional 76,000 crore rupees for semiconductors hasn't seen the kind of excitement that we thought it would. So according to you, which should be the hero sectors for the government to focus on for job creation for the youth?
Yes, so I think, Karthik, you're asking two different questions, because a hero sector may not necessarily be the most job creating sector. Right? A hero sector could be one where we need to create those sectors so that we can stop our imports, the dollars that we are pushing out of this country to bring in, But I think there is a case, taking a cue from you, Karthik, I think there is a case to maybe extend PLI to even labor-intensive sectors. For example, toys or, apparel manufacturing. Why not extend these to, we started with 3, made it to 14 sectors. Yeah. But I think there's a case now to extend it to labor-intensive sectors also, right, especially at a scenario when there are new clusters that are coming up for toy manufacturing, for apparel manufacturing, for even semi, high-tech kind of products which are being manufactured. Karnataka is a great example where these parks are coming up, where people are being invited to come and set up their own units for manufacturing, with one vendor providing the entire infrastructure for that. So I think there is a case for us to expand PLI to even labor-intensive sectors. I think that's what the government would probably want to look at this time in this budget, to my sense.
Okay. Yeah. Shweta, why don't you jump in here? And I think, let's move. We've spoken about job creation. We've spoken about manufacturing, PLI. I think the next constituency that the Modi government is definitely going after is the women category. Right. Now, to my mind, reservation in parliament is one thing, but is there any merit in exploring reservation in the corporate sector or job creation only for women, depriving men of it? What are your views on Modi wanting to go after the women vote bank? What should the women in the country really expect?
Taking cue from what Shri said with respect to how populistic a budget can get, to have a reservation in political sphere is one thing, but to have reservation in corporate sphere is entirely a different ball game. It would be pushing the buck too far. Women at this point in time are not really looking for reservation in corporate sector. Perhaps what they are essentially looking for is the childcare industry to grow. What they are looking for is for them to have better avenues to come back into jobs once they have left those jobs due to maternity care or whatever their reasons are. I think what we are looking at are incentivizing the childcare sector, and what we're also looking at is for government to prop up corporate sector, to come up with policies to hire more women back into the workforce. I think that would be the key thrust here. But I would like to get Professor Nandini into this conversation. Professor, when it comes to women, there are two areas that the government has focused on. One, of course, is to get more women into financialization of their savings by the way of making it more lucrative for women to put money into banks. The other, of course, is to have more female representation. Are those the only two key areas that we need focus on? What other areas are we hoping to push for?
I would obviously think that women's in a way to clearly just identify women and do something for them may not be empowering enough. Okay. It has to be done in a holistic manner. As regards women's representation in the parliament, that is extremely important and it should be correctly implemented. There is an announcement, there is a passing of the bill. However, we know that till delimitation happens, till this happens, that happens. The reality scenario is still quite bleak. We don't know when that will happen, but it is necessary that it happens, because it merely focuses and visibilizes women's power, which is a very good thing. But in terms of financialization or securing women's control over finances is a very important thing, but where? What kind of security is there? Is the banking system efficient enough to be able to cater to the needs of women, provide finances and take care and be very careful with the finances that are deposited with them? Because you just have Jan Dhan Yojanas all over the place, but you have to understand that most of these coffers, most of these accounts become empty in a very short period of time.
Very true. In fact, let's talk about that. And overall, if you look at data, Professor Datta, we have seen that the women labour force participation has increased over the last 9 years. Again, referring back to the economy review that was released 2 days back.
Still very skewed
and yet very skewed in favour of men. So that is number one. Number two, on Jan Dhan accounts as well. Out of the 51 crore Jan Dhan accounts which have been opened in the last 9 years, 55% of those belong to women. On the flip side, out of the 51 or from the 51 crore accounts, the total volume of money in the Jan Dhan accounts is just about 2 lakh crore rupees. So overall, each Jan Dhan account on an average has just 4,000 rupees. Now that in the case of women, you're saying it gets emptied out much sooner, but that may be hypothesis. I don't know if you have data to support that. But coming to the women participation in the labour force, Barnik, you've worked with corporate India, you've had clients across the board, right from your days at McKinsey, followed by Arthur D. Little, and then the new place that you're joining as CEO. You haven't disclosed to us where, but we'll have a chat after the show. But what is holding corporate India in identifying the right talent in women, hiring the right talent, reducing the gender pay gap, because I think that is something which has been irking women, rightly so, for a very long time, and then the glass ceiling, so to speak, of the CXO ranks being broken by enough women?
Yeah, so I'll tell you what corporate India is doing well and where I think the process is still failing. Across most of corporate India, I think there's a very special emphasis on recruiting women, particularly at entry level. If you look at a lot of companies, they are probably recruiting more than 50% of women at entry level. The real challenge is to retain them, right, as they go through the ranks, particularly around the time of childbirth and childbearing. So I think there are 2-3 imperatives the government should work on. I think the idea...
What is it that the West is doing better than us? Let's put it that way. I'll tell you, childbearing is something which is, it's a global concept.
I wonder if West is doing anything better.
No, there are ideas of this. For example, the care economy, right? In a lot of economies, actually, you can get tax benefit or tax credit for the child care expenses you take. Either it's fully tax deductible, in some cases you get a full subsidy against it. In Europe, for example, all childcare expenses are 100% subsidized by the government. And if you keep a housekeeper looking at the house, you get 50% subsidies, right?
But Sri, aren't there challenges to that? Do we want to incentivize people to have more children because they will get a dole from the government? I mean, we are at 1.4 billion, 2030 we are likely to be at 1.5 billion. Per capita GDP is a problem. We are struggling to get to the 7 trillion figure. Do we want to incentivize?
So I think we need to understand a few things here, Karthik. When the Prime Minister is talking about Nari Shakti, first of all, I don't think the Finance Minister or the PM is talking about an overnight change in the status quo. That's the first thing. There are many ways in which we can empower Nari Shakti. I think the most basic way is to give them education, and the other way is to the ones who are already in labour force. How do we keep them in labour force? And we don't see a dropout of women from labour force. So to Barnik's point, yes, I think there is a case. I loved Shweta's point about, that women should be incentivized. Why not give me some incentive for, a tax break, for example, if I have a child. I don't think that's going to result in a dramatic increase in our population, because at least the women who are in white-collar jobs, I think they are far more sensible. They know what kind of family they want, and what is the life that they want for themselves and their children. So I don't think there's any great risk of a population explosion if we were tomorrow, to say that, okay, anyone about this salary can take 15,000 or 10,000 rupees a month for childcare. If that it means that the woman can come back to, a workplace rather than be at home and kick her job and take care of the child, especially in the case of women who have child with, special needs. I think that's something the government should look at very closely. And if that comes, I think that's a great thing that we should work towards. As far as the larger rural women are concerned, I think it's going to take a much more comprehensive kind of plan. We have to identify there are social factors, not just economic factors, why many women are not participating in labor force. So how do you overcome those? So I think that's through awareness, through education. So it's not just a question of economic incentive. So it's a pretty complex subject. I don't think there's one magic wand which anyone can wave and make sure that, okay, starting tomorrow, there's a big jump in women participating in labor force.
Let's bring Vivek also into this conversation. He's been waiting in for a while. Vivek, gender budgeting is something we saw in 2009, if I'm not mistaken, kick in for the first time in India. 2024, 15 years on, has gender budgeting worked? And if it has worked, great. But if it hasn't, then what do we do from here?
Well, it's a difficult question, Karthik, I would say.
Hence, going to an economist.
So I am not sure if I can do justice to that, but nevertheless. So gender budgeting, I mean, to all the points that has already been presented here, gender budgeting is a formal way of classifying fiscal resources for a particular cause. It doesn't mean that the previous budgets were gender insensitive. So you're just formally classifying expenditure under that head. So I guess we've got to move beyond the budgetary head here, because while yes, the budgetary platform provides you that opportunity to announce certain specially crafted policies for the gender, but I think one needs to go beyond that. And what I loved about the points that was discussed here is that, one, we need to have a clear focus on improving the labor force participation ratio. India not just has a skew between the sexes. I think India stands disfavorably, not very favorably vis-a-vis a lot of its peers. So the labor force participation ratio for India is one among the poorest among many important peers. So we have concrete evidence of how improvement in labor force participation ratio can lead to an structural improvement in GDP. So this is neatly documented in economic literature, and there is obviously no second-hand argument for this. So we need to be sure that there are concrete steps that can be taken for improving the labor force participation ratio. Now, how do you incentivize that? You incentivize that with obviously the soft skills like education, give them voice, etc. But I think from a sustainable perspective, having education and voice also needs to get married with the call of financial power that a particular household, especially dominated by the women. So voice is one thing, and giving financial muscle also will probably do the task together.
Right, so voice and financial muscle to go hand in hand.
Something very interesting that Vivek pointed out. He said greater women participation in labor workforce often results into greater productivity. A lot of corporate leaders out there believe that there is more of a correlation, relationship between the two as opposed to the causation relationship between the two. Hence, having more women is of course desirable from a social economic point of view, but may not be so much desirable, Banik, when it comes to actual productivity. In your assessment, as somebody who's been head of and a chief of a company, is that something you've noticed as well?
No, I would completely disagree. I don't think it's an economic imperative and a business imperative. Across all places, I've noticed women outperform men across most tasks. So I think people who believe that you need to hire for socio-economic clauses are actually missing the point. Having greater gender diversity in your workforce actually builds more creativity, more ideas. It pushes organizations forward. It creates more empathy. It improves people management. There are lots of ways. The challenge with most corporate CEOs is that you find great women, but you can't retain them, right? And then it becomes a ever-repeating cycle that you keep on hiring, you keep on losing
And
people.
why is retention a problem?
It is to do with many things. The moment a family comes in, the workplace is not designed right. For people to have families. So if you look at some new age people, and I visited a startup in Bangalore a couple of days back, and I was quite happy to see that it's a startup run by a woman founder, right? So she understands what women need, right? So there are spaces where you can bring your kids, you can drop off your kids into a play area if you want, right? So we have to be far more aggressive about retooling the workplace to support women who have families or who intend to have families, right? And I think they have to feel welcome. I think a lot of the impression they have is at the moment they have a family, maybe the organization is not welcoming to them.
Antagonistic towards them.
Yes, perhaps. It is antagonistic.
It should not have to be a trade-off.
Absolutely.
There is no need for a trade-off. I think, to be fair, I think one of the things this woman CEO told me that we have gender-neutral policies for maternity and paternity, because we believe that the father and the mother should be equally responsible for the child.
So divide the care work, perhaps.
So divide the care work. If you divide it, I think so. I think there needs to be a little bit of push from the government. I think the government has done a great job. India has one of the best maternity leave policies in the world, right? It is far better than the US, right? So we've done some work, but then what do we do about childcare? What do we do about encouraging companies to retool their workplace and their policies to encourage women?
Right.
I think the intent is there. The execution doesn't fall through. The other big idea I really believe is that the solution for labor force participation for women is encouraging entrepreneurship in women. I have seen women CEOs and women entrepreneurs are more effective in hiring women and retaining them. So I think we have to think of what we need to do about financing. Maybe there is a mudra loan for women. We have to think about how to encourage 1 million women entrepreneurs, because if they become entrepreneurs, their ability to work with women gets higher.
So in the startup space, Barnik, if data serves me right again, I think that is already beginning to happen. Out of the 98,000 startups registered with Stand Up India, I think 63% of them are women-led. So I think in the startup space, from how government views it, it is happening. On ground, of course, you would be a better judge.
I disagree with the number, because if you talk to women founders in Bangalore, they will tell you the number is between 10 to 15%. It's not 2/3. Right? If you look at startups where women are either a founder or a co-founder are playing a pivotal role, right? In the CXO suite, it's probably 15%. Right? Again, there may be a lot of registration here and there, but again, startups, I see that ratio holds. But if you go to a startup where a woman is in the top roles, right, you will actually see far more women. You will see a far more worker-friendly, a woman-friendly environment, right? So I think we have to encourage more women, and that's where the money can put, the government can put more money. Remember that the approval rating of our Prime Minister is 10 to 15% better in women than in men. Right?
And so hence that's the constituency he's going after. But gentlemen, sorry, we'll have to head into a quick break.
Can I just come in a little bit on this? When we are discussing the question of labor force participation, we can't just restrict ourselves to the entity of corporate women. I mean, this has to be connected with the question of education and skill enhancement. What kind of women are coming into the corporate sector? There has been a big debate that feminization of the Indian labor force, particularly in the informal sector, is it a question of visible empowerment of women, or is it a question of just economic necessity of supplementing family incomes, or when you know, husbands say leave the rural countryside to come and work in the cities?
I think this whole debate of meritocracy comes to an end with just one data point, that when was the last time any of us saw a CBSE topper being a boy, not a girl? But anyway, I think we'll leave it at that for the moment, and more to discuss after this very short break, where we will go a little deeper into what the agri sector can expect from the government and the government's own infrastructure spending. All that and more, just about 30 minutes for Finance Minister Nirmala Sitharaman to go into Parliament with a Bahi Khata, digital one at that, and present the budget. But before that, a lot more ground to cover. Come back with us in just a minute.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की। अभी डाउनलोड करें।
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा।
There is certainly a wall of capital coming into the clean tech, climate tech space, not just in India but across the world.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News 9 Plus. Ahead of the curve.
Welcome back. You are watching our rolling coverage. Just about 25 minutes to go before Finance Minister takes the stand in Parliament and delivers her interim budget speech. Remember, this is going to be her 6th budget presentation in Parliament. But a lot of ground to cover before that, and critical among those being that is the government going to walk the road of fiscal prudence, or will Modi ki guarantee come with an undue advantage towards the agriculture sector, towards the pro-poor policies and towards women and the youth? Well, all of these are integral to keeping the economy ticking and getting the engines of the economy firing on all cylinders. But the fine balance between fiscal prudence and populism is something that we want to continue our focus on. Rakesh Khar, editor, News 9 Mediaverse, joining us. We've also got with us Amrish Balika, independent market consultant and expert, and we've also got Dr. Abhishek Murli, who is joining us to discuss taxes when we come to that. Let's start with you, Rakesh, first before we go to Amrish Balika. Rural demand has, of course, been a problem area, and that rural demand can kick in only if there are enough rural jobs, and those rural jobs will come on account of employment generation across the entire rural spectrum and not just the urban areas, where we've seen the job numbers remain better than those in the rural areas. So, according to you, what is it that the government is likely to announce in the next 25 minutes on the pro-poor, opportunities that could arise?
Very difficult to predict, Karthik, what the government will do. We always have seen that, this particular government doesn't really, let out what it wants to do. To my mind, no big hits, this interim budget. There would be some, easy singles, and probably, borrowing an analogy from cricket, they will steal some quick singles.
Okay.
No big hits. Big hits will be reserved for the final budget. They have done a big push on the technology side in the last budget, if you remember, on the agriculture piece.
That's right.
So the idea is to integrate technology as the big key driver, because that was one missing piece. The other big missing piece yet is the large scale business, which is not yet got fully integrated in the agri ecosystem.
Okay.
So that might get some trajectory in this particular interim budget or maybe the final budget.
Okay.
We are presenting the interim budget at a time when there is an additional pressure in the agriculture ecosystem. As it is, you rightly articulated that it's not doing all that well. You know, despite the promise of, you know, it really shaping up double income, all that hasn't happened. We know that.
Yeah.
The additional pressure, Karthik, is that, you know, because the jobs are not generating at the level that they were expected to, so there is a pushback of labor force going back to the rural area.
That's right.
So what is happening is that the rural area or the agriculture sector, which is contributing or feeding a large section of population at a time when it is the lowest contributor to the economy.
Right.
So that is the additional pressure that is there, and I hope and imagine that the government is cognizant of this reality.
All right.
So there is going to be a pushback on bringing in some fiscal incentives for the, you know, agriculture sector. But as you rightly pointed out, agriculture can't be taken out as one single piece in the ecosystem.
Right.
They will do in a larger alignment of the pro-poor policies for the rural areas, which would include Manrega. There would be a larger allocation. I keep giving this example, Karthik, I've said it in the past also, that, you know, when this government came in, Modi came in 2013, there was a view that he will drop Manrega like a hot potato, but
Right.
you know, it's a political constituency which no prime minister with whatever mandate will ever be able to do it. So
Right.
it milks votes, it brings votes, and it is now come across, though I personally don't agree with this, you know, uneconomic activity leading to, you know, some votes, but the fact of the matter is that we've come to reality with Manrega being a great vote catcher and also alleviating to some extent the rural distress.
Right. So I think Professor Datta might disagree, and she'll quote to us Aaron Keynes, who said that get people to dig trenches and then fill them up. But we'll come to that subsequently, Dr. Datta. I want to go to Amrish Baliga, who's joining us right now on this broadcast. Mr. Baliga, thank you so much for joining us this morning. Always a pleasure to have you here on News 9 Live. Now, we are at this cusp right now where there could be pro-rural demand, pro-agriculture policies being announced, which may not be in conflict with fiscal prudence. And that is likely to do well perhaps for some agri stocks and do well for the FMCG stack, which we've seen has been a laggard over the last 2 quarters. What are your views on how the agri sector and the FMCG space is viewing the budget?
No, I mean, surely there will be a focus on the agri space because they've not had a great year the last year. So I think there'll be better insurance schemes. I think there'll be increased sanction for Manrega. So I think agri would be a focus area, no doubt. And that needs to be done because if you look at the rural demand, that's been quite soft in the last couple of months. So something has to be done to, in fact, boost that. I mean, this would surely be positive, basically, for the agri ancillary companies like fertilizer and seeds, etc. And at the same time, it'll be positive for the FMCG space because we should see a boost in demand going ahead.
Okay, and specifically for the FMCG sector, which is dependent on rural demand in almost equal measure as urban demand to kick in, job creation and focus on the youth and pro-poor, all of these pretty much tie in well for the FMCG space. So how do you expect, the FMCG space to react to policies which may encourage, more rural demand kicking in?
No, in fact, if there are announcements to this effect, I mean, what we are talking about, clearly it will be positive for the FMCG space, and we can see some amount of appreciation in the stocks because we have seen that the last 1 year, it's not been too great for FMCG, I mean, except for a couple of stocks which have moved. I mean, most of the large caps have been where they were.
Yeah.
So I think it will be extremely positive. And I would like to touch upon one more point, which can also boost FMCG space. Middle class, which is normally the most ignored one. I mean, there is an expectation that there could be some tinkering in slabs this time, which will put more cash in their hands. So that again should be positive for the FMCG space as well as consumer durables.
Okay, more cash in hand. Shri, if I can come to you, cash in hand doesn't seem like fiscal prudence. Cash in hand seems pretty much a dole. So there's a difference between government making, investments and government incurring expenses. So more cash in hand likely to happen in the interim budget given we are in election season?
So obviously, Karthik, I think earned income is much better than a dole coming from governments,
Right.
other tax collections.
Right.
So I think that's what, we should eventually aspire for. But if the reality is that there are people who are suffering because agriculture is not something you can really control. You're dependent, large parts of India is still dependent on rain-fed agriculture, and the holdings are small. So I think if the government had to pick a choice between helping distressed people and then maybe letting its fiscal deficit run over a bit, I think it's a no-brainer which way the government will go, because that's the moral responsibility of the government to make sure that people who are in distress, they are taken care of. Because there is no exact science behind fiscal deficit as such. I mean, now that's what the Western world is also coming around to. Well, obviously, the very rationale for holding your fiscal deficit down is that so that more and more money doesn't go into paying your interest, burden.
True.
But the fact is, this is a government, it's a poor country, we're a developing country, and we have people who need to be supported, especially at moments of distress. And if the government thinks as a case, I think you should go ahead and take care of them. But with a very clear timeline and a path that we have to migrate out of this system, maybe in 5 years. That's to Rakesh's point about how technology has to be brought into agriculture, so that the basic problem of agriculture's productivity is solved. We're not dependent on the vagaries of monsoon every season. That has to end. So that's, I think, what we need to do. And also the earlier point we made in the discussion about, value-added food processing.
Absolutely.
So that the food is turned into something more valuable, and the money then flows back into the entire value chain, including the hands of the farmers.
Right, absolutely. So I think valid points there, Barnik. We are talking about more technology infusion in agri. We are looking at better farm output, lesser dependence on monsoon. And at the same time, I think we all agree that there are certain expenses that the government has to incur. And these expenses have to cater to the demands, to the needs of the poorest of the poor. That aside, government also needs to earn enough revenue. Now, as of data from 2023, we've seen that corporate tax as well as, direct tax as well as indirect tax, both corporate and individual, indirect both GST and otherwise, have contributed in equal measure to government's revenue, both at about 15% each. Is that enough? And do you think there needs to be some sort of greater buoyancy in GST collection, even though data that came yesterday says that we are touching 1.7 lakh crore plus in GST collection? But do you think that balance of direct taxes and indirect taxes is enough, or should one be given a little more fillip than the other?
So I think this is not really that controllable by the government as we may believe it to be.
Okay.
Right? Buoyancy in indirect taxes, including GST, is a direct function of economic output.
Consumption and output, true.
So as long as we have policies which promote consumption and economic output, we will see buoyancy in GST tax revenues. The big challenge is direct taxes, where there are not enough Indians who pay taxes, and people who do pay taxes don't pay their fair share. I think given that it's an election year, I don't expect a lot of measures to increase tax buoyancy there, because it will be viewed negatively.
Okay.
So I think what the government will expect is that the economy keeps driving at 7.5%. That drives buoyancy in GST, and there will be some buoyancy in direct taxes. If you see increased allocations, which I expect to see, there will be an allocation increase in Manrega. You will see pro-poor policies. I think the rural problem you have to sort between the pro-poor policies in terms of having more food grain and all of that, the government will continue.
Right.
You may see the government ceding to some demands of either including more crops into MSP or increasing the MSP prices, right? Which is a very popular measure which has resonance with farmers across India, right? Right now, MSP prices are barely guaranteed for a few crops, and they're all mostly grown in Punjab and Haryana. If you have to go after the poor farmer in Uttar Pradesh, Maharashtra, or even Telangana, you have to expand the scope. So I do expect, or there may be a thinking that maybe we'll announce something, or we'll announce a relook at that. I don't expect any big deal or big announcements on value addition, because that would involve bringing the corporate sector in, and you saw the backlash to the farm reforms, right? So I think the government will tread a careful path on that given its election year. So there will be increased allocation to agriculture, there will be increased allocation to the poor.
But no tinkering of tax rates.
No, but the government will quietly cut allocations elsewhere, which they will never talk about, and it will take us a couple of months to figure out from the statements where it's been cut, while maintaining fiscal prudence and a path to 4.5%. I don't think there may be something announced on the tax rates which may be cause of cheer. Maybe, I don't know whether there will be an announcement of new slabs or some temporary stuff, but I don't think there will be any push to increase taxes, at least at this stage. It's too risky.
No increase in taxes and unlikely reduction in taxes also. But let's get a CA in and let's get a tax expert. Dr. Abhishek Murli is waiting in, listening into our conversations. Dr. Murli, thank you for joining us. Help us understand, is there likely to be the possibility right now of the old tax regime getting kicked out altogether and the government sticking only with the new tax regime, with the caveat that with the old tax regime, even the exemptions go, and that may not augur very well for a certain section of society?
You know, ultimately, I think the plan of the government is to wean out the old tax regime. The logic is very, very simple. You see, under the old tax regime, you may be claiming a HRA, you may be claiming an LTA, you may have an LIC premium or a Mediclaim, but each and every claim that you're making has to be verified by an assessing officer to see if it's genuine.
Right.
And of course, given the sheer number, it may be impractical to do it.
But now
So the
there's
logic
technology.
why
In
they
fact,
go-
the IT department itself has said that they are deploying AI and they're deploying big data to, to really weed out all these discrepancies, and hence the better tax collection numbers as well.
But no matter what AI, I think it's going to be difficult beyond the point to establish the genuineness. You can show that, oh, it has gone out. Bank statement can reconcile and say this amount has gone out. But has it gone out genuinely? Has it gone to the right person? There are certain practical challenges that even AI or data mining cannot solve. So the new regime is meant to address that. We're not giving you the deductions. We're not giving you the exemptions. We're giving you a straightaway tax relief.
Right.
But the biggest challenge with this is the people who have already committed to certain payments.
Right.
Now, I may have already committed to a PPF. I may have already committed to a Mediclaim for 20 years.
Correct,
I
hoping
may
for
have
a tax
committed to an
benefit. Very true, absolutely. But, I just want to understand, Abhishek, given that you are a chartered accountant yourself and your organization works with tax filers across the board, if you can give us some sense of how many people opted for the new tax regime last year as compared to the old tax regime.
Well, my personal experience with both my clients and the various CAs I've interacted with, the various taxpayers I've interacted with, still the majorities do prefer the old regime. The new regime, even with the benefits which was introduced in the last budget, is still a little bit on the edge, I would say.
Right.
I think the real numbers will be...
Okay, I think we seem to be losing Abhishek Murli. The point he's making is that there seems to be a split between the new tax regime and the old tax regime. But Professor Datta, if I can bring you into this conversation, one problem, of course, or one challenge is this mitigation of two tax regimes, one against the other. But I think a bigger problem that the government is staring at is this pension burden. So I think we should spend about a minute or two before FM goes into Parliament and understand, is this the budget which will actually bring in the new pension scheme come what may, against the wishes of many states?
Absolutely. This is something where the government will ultimately have to pay attention. And this is something that the new pension scheme, as it is operable today, is actually not very satisfactory. And that is the reason why there is a clamor for going to the old pension scheme. But, that clamor is coming from less than 2% of the Indian population who are because the old pension scheme was never the pension scheme for the corporate sector or anything.
That's right.
It was only for the government sector.
Employees, yes.
And, government employment is anyway quite on the decline. So, it is not as if, but this is a powerful lobby, and they will obviously make, and it is very, very clear because we see it in the government sector that the old pension scheme, particularly when your longevities are increasing, has a much better credence for people who put in their hard work and lives for their employable age. So, I think that is something, but on the other thing, the old tax regime, if you do a simple cost benefit analysis today, it is very, very clear that most people on the higher brackets will prefer the old tax regime than the new tax regime, because the new tax regime's reductions or taxation concessions are not enough to compensate for the deductions that are made, and that too at the 30% and above slabs.
Right. Barnik, another question that most people ask.
On the NPS, there is a certain limitation that the central government has. We do remember recently these 3 states that Congress lost, they had promised, the old pensions.
Absolutely.
So, that was a reprieve in terms for the entire fiscal health of this country.
True.
But Himachal, they won essentially on the promise which they have lived up to of old pension scheme.
Right.
So, in that sense, a union budget doesn't have that leeway to enforce NPS.
Okay, sure. But Barnik, I wanted to raise this point since we were talking taxes earlier, that there has been this debate and citizens, ordinary tax-paying citizens, sometimes feel cheated that the highest tax slab for them is about 30% as compared to corporate tax rate at 25%. Now, we understand that the corporates are incentivized with lower taxes so they can generate more employment and hence those individuals file more taxes. But some sort of tinkering in corporate tax rate, which may not directly influence voters, but gives corporate India that little elbow room, headroom, leg room to make investments and to hire afresh.
Yeah, so first let's clarify the highest tax rate with cesses and everything is around close to 38.5%.
Okay,
right?
okay.
And that also if you're in the new scheme.
But then it's 37% even for the ultra rich, right? So in that sense, it sort of equates itself.
So it's been high.
Okay.
I don't think there'll be any announcement for reduction in corporate tax rates because the government has made a commitment to go to a moderate tax regime.
Yeah.
In fact, if you talk to corporates, they want 5% less, right? So I don't think there'll be any tinker in corporate tax rates. I think it is quite likely, may not be in this budget, but maybe in the future budget, that the government may announce further capital subsidies in a PLI 2.0 program.
That's right.
The need for the hour, in my opinion, to promote corporate growth is not to touch taxes.
Okay.
I think the established tax slabs are reasonably well accepted by corporates. I don't think there's a big demand that they need to bring it down. But sector-specific PLIs, right, are more important than having a blanket scheme, right?
Okay.
If you look at in electric vehicles, for example, the FAME scheme was quite successful,
right?
Though there was a lot of misuse. So the government has probably learnt how do you prevent misuse while encouraging things. So may not be this budget, and again the government may surprise us, but by the time we get to the final budget after the election, there will be a new industrialization policy. Maybe you'll have PLI schemes for different sectors which are very focused. And the government is struggling, right? The government is struggling to attract investment beyond a couple of sectors. Mobile manufacturing, we've heard automotive, semicon has not taken off, food processing has not taken off, defense has not taken off. So I think there will be nothing in the budget which will suggest that we are increasing taxes for corporates,
right?
Because it's going to scare people away and not attract
for
investment.
the rich farmers.
So live visuals
not for the rich farmers.
Live visuals coming in at this moment. Finance Minister Nirmala Sitharaman is in the new Parliament building. Of course, remember this is going to be the first budget presentation from the new Parliament building, and Finance Minister Nirmala Sitharaman walking in there along with the entire panel of the budget makers and the secretaries of the Ministry of Finance. Well, that is the team that has put the budget together, and in just a few moments from now, 2 minutes or so to go before the clock strikes 11, will we really unfold what is there in the budget. I think an opportune time to take a quick short break and return with Finance Minister Nirmala Sitharaman standing up, taking position and presenting her 6th budget. Stay tuned to News 9 Live. We'll be back in just a minute.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए और